All right, everybody. So we'll take a look at a couple of opportunities that presented themselves today and how to use the tape reading chart, etc., etc. All right. So basically, market went to the level, right there. And as I explained multiple times, right, you have to wait until the market goes to a particular level. Signals are random unless they're at levels. When they are at levels, any signal or setup or whatever it is that you use, the probability just increases. I don't know how else to explain this other than to say that when it goes to the levels, support, resistance, spring and upthrust positions, supply and demand zones, test of breakouts and breakdowns, when it goes to those levels, what happens is the signals or setups, they're not as random as they would be in the middle of the range. All right, so there's a higher probability of success. Anyway, point being, it goes to this level up here, right? That's when, it's looking real good. So what happened was, it went up there. And then the first thing is level. Second is you had the climax, climactic behavior right here, right at the top. So 5,700 contracts traded up there. And then what happens? It retests and it's like 4, 11, 11, 5, and then 31, which was effort because it had no fall through and instead went down. So I explained multiple times that just wait until it's at a level. If you can't wait until it's at a level, that means you suffer from FOMO and you need to get over it. All right, so it goes there and then, it takes this low, but it doesn't break it. And then later on, it makes a lower low break. Boom. And it's game over. So right there is basically saying that this is distribution at resistance. That's what the interpretation is here. And this is the confirmation break. You know what this was on? It was the biggest break in 38 breaks. Yeah, that's right. 38 breaks. That is the biggest, not 38 breaks, 38 bars or columns, columns, I think P&F columns, right? Or bars, whatever you want to call it. Bigger than 38. That's perfect. And after that, it's just a matter of catching the retest. And it goes. Now it's over here, but I don't know what the hell is it at a zone demand. Because this is probably end of the day. And we're going to see how this plays out. Probably some short covering at the end of the day. All right, so that's what happened in crude, and that's what gave you the opportunity again. Distribution at resistance or within the resistance areas, right, where you diagnose, and then I have confirmation. So distribution, resistance line, boom, break, get in. All right, moving on to the next market. All right, so first of all, I don't know how I missed this one, but I don't know how the hell, what I was doing. But market went into a demand zone, and I'm showing you guys because this is like, I would like to help the Wyckoff style traders. Anyway, so it goes into the demand area right here, this demand zone, right? Heavy volume. Is there a climax? Yes or no? Right there. It's 61. What did I just do? 6,100, right? Then this volume is climactic. It's the biggest volume in fucking 88 columns into a demand area. Okay, so a couple of things can happen. It can continue going and break that demand area down, going to lower levels of support, but that's not what happened. Usually it's just climaxing into support. And then it had this little high. Then it broke here. Then it went sideways, right? So you don't have your change yet. You don't have a high uptick, except maybe this 35 up here, maybe a big uptick. If it was bigger than 37, I'd say yeah, but it's not. So you had all this volume, the 71 down, and then it gets taken out by this change of behavior right here from that demand area, okay, which takes out that prior high. And look below it, low volume test. That right there is telling you someone was selling on the way down, but someone else was buying on the way down. As it was going down, they're buying this print they bought, because they always take another side, right? Down, and boom. So this is beautiful. This is what I like to see right in this, in the demand or supply area, and then, go the other way. And that's what they did. Made that higher high. Nice little pullback test. And how big was this? 1, 2, 3, 4. I mean, it's not a great big move, but I mean, it was good. Here was also a beautiful situation. All right, now look, I'm gonna say another fucking time. You have a resistance area, right? Yeah, it didn't go totally in it, but it's really damn close. All right, into the orange resistance. When it goes right into it. Now, what's happening? Base building. What is base building? Is distribution. A lot of these traders, big guys, they trade support and resistance. And that's why when you're in those areas, you see the bases develop. So I'm watching this, and I'm looking at this, and I'm seeing this. This is just building sideways, all hesitation to go higher, all creating resistance, all creating volume, all doing what? Even has a POC in this area. What is it? What's going on? They're distributing in order to sell that, the fundamental news, what was it? Something that came out today, I forgot. They're all planning to take advantage of that by breaking it back into a demand area. That's what's going on. And finally it breaks, but unfortunately they didn't give a deep pullback test re-entry. So I mean, what are you gonna do, right? But again, guess what? It goes back into this, because right now it's range bound. All right, it's range bound. It goes back into that demand area, and look what happened. Buyers come in. So they're playing the range, demand to supply, back into demand. See that? Yeah, but you just have to be wary, because it's pretty tight range. It's not that, great, right? And then eventually it just goes up to here. There's some climactic action over here, and then now it's back in the demand area. Now, is it going to base out and then give me another opportunity? I don't know. I'm waiting for it. I'm not going to just sit here, but that's the idea. Again, if it's not at a level, just let it go. If it's not at a level, just let it go. All right, because what happens is you must have the level. And if you want to know what Wyckoff said, I'll give you a direct paraphrase from his course. He basically traded the levels, but he doesn't include that in the study. He includes it in a separate chapter where he says, if the market is swinging between 30 and 35, look for buys at near 30 and sells near 35. Basically, support and resistance. That's what he did. That's what he wrote. You can go verify it. All right, so we're back here. I'm going to see what happens here, if it's going to break through, or is it going to some reaccumulation. I really don't know. It might just break through this time, because it's been here once, it's been here twice, goes to resistance, the sells are still there, retest resistance here, too late, sell, now back in the demand area. It wasn't a big base, but I don't know, it might just break down. I don't know yet. It's not, I have no indication. All right, let's move on to the next market. All right, so this is the ES. I forgot where it was in the ES, whether there was something. Did this, puked. Then yeah, this was a very small reversal, right? I was ready for this, but I just didn't get in because there was just too much fundamental news and it was just spiking down like that. So I didn't get it, but basically here you go. There's your climax. at the bottom of a base. All right, that's what you're looking for. That has no follow through and instead start going sideways and hesitating to go down means there's going to be a bounce. So then these guys came in over here, buying right here. And that's the high that needs to be taken out. After that, there was some serious selling pressure, picking up here. But guess what? They didn't break the low. And then eventually it takes out the high. Once it does that, it just goes up. Here, I got really ready because again, it's going in there now. Yeah, there's no level here. There's no level, and you should not take this trade. But it is pretty damn obvious that this was something going on over here. Why 20,000 contracts traded right at the top? And not just that, but it up thrust and breakdown on the biggest bar in 100 columns. 100 bars. The biggest. It was a no-brainer that this thing is the smart money coming in and saying, I'm not going to let you go higher, and there's the rejection. That's your climax. That's your fake break. That looks like a breakout, but it's a fake break, also known as an up thrust, right? And then it gave a retest right here near that 20 level, and then they had a little move, but that's all I basically needed. And then, the day ended, and of course they covered their positions, and this happened. So this was a little move, right? But I mean, you get a good amount. It's like 19 all the way down to about 4,400. So that's what happened. And then after that, over here, these guys, they're protecting that base, so they came back in. Now, what's going to happen next, we don't know, but just let the situation develop. And that's the other thing I want to mention, which I don't mention too much, but I'm going to try to mention more. Anytime you're in a trade or going to get in a trade, you have to realize that someone else is taking the other side, or some smart money, whatever, liquidity provider, etc. Who knows? Broker, I don't know. But the point is, you can always be wrong. All right, that's the first thing. But and you have to accept that. And the second thing is what was that second thing? The second thing is, no matter what you think the target is going to, it may or may not, because this game is about accepting uncertainty and how comfortable you're with that, and if you can execute under the conditions of uncertainty and consequently fear. So what does all that break down to? It means you should scale out of your positions. This is a big psychological benefit. So, you see folks that are trying to hold their position all the way to the count, or they're trying to, just hold and add. No matter how good you think, how high or low the market's gonna go, like if you see this, biggest in 100, you would think you would at least get a measured move, right? But it doesn't go. It goes down, but then it reverses unexpectedly, right? The only reason you get profits is because scaled out some. All right. So you always scale out of the position, no matter how good it looks. This is just advice, but I don't know what to call it. But anyway, the point is, you scale out of positions. You always scale out of your positions, and don't hold for that big home run, because you never know what's going to happen next, and if there's a large buyer who's either at support or may just enter at any time. So you always scale out, and that way, even if it goes down and goes up, you get something out the trade. You get something out the trade, and instead of getting nothing out the trade, trying to get a big 8 to 10 hour move, you get something out the trade, and then it goes. So the advantage of that, it's not really a money management thing, it's more of a psychological thing. Because if you're applying all of your stuff, all of your judgment and this, that, whatever approach, it will be very helpful for you to get something out the trade, then spend the day and trying to get that big win, only to realize that you're at break even when you could have gotten something out the trade. So it's a trade-off is this. The trade-off is you're not going to get the maximum R because you're scaling out. So what are you going to get is the trades that are little moves and then go against you, you're going to get something out of them. And therefore, you have more winners, but less R. You have more winners, but less R. Now, what is more psychologically empowering? More winners or few winners with big R? The answer to that question will directly impact your trading, and it's more of a personality thing. But that's one of the questions that your risk management needs to consider. Some folks, they don't care about about having a lot of winners. They want extremely large R. They want the big move. But the thing is, in my opinion, that's a mistake because those are outliers. Those are they don't happen that frequently, and it can take a toll on your patience. So I think the approach is to scale out, and in that way you'll have more winners, and it's actually psychologically easier. All right, done. Take care. Bye.